Good morning, traders. Matt Weller here, Global Head of Research with FOREX.com. Today is Thursday, June 25th, 2026, and ahead of America's 250th anniversary next weekend, the U.S. economy is partying like it's 1776. In today's video, I'll break down everything that you need to know ahead of today's U.S. session. Let's get into it. Some of the biggest news, at least driving the stock market today, were Micron's earnings after market close yesterday. Micron, kind of as expected, beat expectations on both earnings and revenue, but more to the point, had a very strong guidance for revenue and earnings expectations through the rest of this year and beyond. That is pulling tech stocks higher. You can see here the NASDAQ 100 is trading up about 2% ahead of the US Open, and it's revived the AI trade, which was showing signs of struggling. Elsewhere, other markets are fairly quiet heading into today's US session. Oil is edging lower. The US dollar is edging higher after hitting a 14-month high yesterday. Today's U.S. economic data was almost unanimously strong across the board. The key focus is core PCE, or core personal consumption expenditures. This is the Fed's preferred measure of inflation, and you can see here it came in mostly in line with expectations, with perhaps the year-over-year measure being a bit stronger than expected due to some positive revisions to last month's report. Other, perhaps more timely economic data was also strong here in the US. We saw personal income and spending both rise by 0.7% month over month, both stronger than expected. Initial jobless claims came in below expectations. This is a good thing for the economy. That means fewer Americans are claiming unemployment benefits. And we saw Q1 GDP obviously way in the past, but at the margin, you'd rather have that be stronger than weaker, and that was indeed revised higher to 2.1% annualized. So essentially all of this economic data, none of it truly top tier in our current environment, all came in better than expected, and that's something that seems to be broadly supporting the rally that we're seeing in U.S. assets. Today's chart of the day is the US dollar versus the Canadian dollar, which you can see has been on an absolute tear since the start of May, adding more than 700 pips over that period by some measures. You can see here, not on mine, but depending on where you get your prices, you might see the dollar CAD rising for 11 straight days. Either way, this is a market that has clearly been surging in recent weeks. I looked at the RSI here, the 14-day RSI in the lower panel at about 87.5 as I'm recording this. This would be the highest RSI reading that we've seen in a decade. So very strong move here. I know a lot of you think when you see a strong move, that means that perhaps it's overdone. And frankly, perhaps it is overdone and we could see a pullback. But my broad takeaway when we see such a strong, consistent move in the market is that there's a lot of buying pressure here in the US dollar relative to the Canadian dollar, and that traders who might have missed most of the move might be very eager to buy on any short-term dip. So if we do see a pullback toward previous resistance, now potential support in the 41.30 range, that's something that I think could lead to a bounce and give an opportunity to join in on this very strong trend at a better price. So keep an eye on that. Only if we lose that 41.30 level would I start to get more concerned about dollar CAD's near-term uptrend. That is today's video. Thank you for carving a couple minutes out of your day to watch. If you could do me just one quick favor before you close this out, please do drop a like on this video. It's an absolutely free way to show your support. It helps us with the algorithms and we'll get more eyeballs on this video. Also, if you're not already, please do subscribe to our YouTube channel at FOREX.com for more videos like this. Thanks again, and best of luck with your trading today.